All right. Hello, everyone. It is Friday, February 23rd, and this is the video for today. So let's start, as always, with our long-term bias here. We are not having anything change too much from the last couple of videos. The big change here is that we are still bullish. If we had a really deep retracement, we would be less bullish, but we kind of had this, you could say there's a little bit of compression here on the all-time high. NVIDIA earnings blew us through to a new all-time high. So fundamentally and technically, we are still very bullish. We are watching for a couple of signs on the horizon, namely China. That is the main thing we are watching out for. Nothing to be concerned with right now. We follow the price action, that's bullish, but that is an anticipatory piece of information that we are keeping in mind. Now, our shorter term market bias here is still bullish. Yesterday, we had a massive gap up. When SPY makes these really big moves, and if you are curious about this move, look at an HA candle. Long candle, right? You got to include the gap as part of that move. We make a really big move up. That's a 2 ATR move yesterday. Market has to digest the gains. It's going to be a day of rest. It gapped up higher today. Did not have a gap and go like yesterday. Instead, we had a gap and we had a gap fill on the open. So right now we're holding that prior day high, that close, but we have a day of rest. We have to soak up some of the supply, some of the profit taking that happens when the market makes these very, very big moves. The 8 EMA will catch up a little bit, and then we will be on our way higher. Now, let's zoom in into the intraday action. Or actually, before we do that, let me talk about what we're looking for at a D1 basis. We had this nice breakout here. We're holding this level so far, which is good. We want to preserve this open of the candle. So we have a test. That's okay. That's acceptable. Move down. A hold above this gains here for 1, 2, 3 days is even better. It shows that buyers are still engaged. Profit takers cannot knock it down. What we're watching out for is a couple of things. First, on the economic news calendar and the market event calendar, there's not a lot happening for the next 2 weeks. The closest thing is ISM services, which happens on March 5th. Then you have the unemployment report on March 8th. The next week, we get a whole bevy of news. We have CPI, PPI after that, retail sales is coming out, and the week after we have the FOMC statement. There's also some minor earnings, you could say, in the cybersecurity stocks. Crowd, PNW just had its release as well. So there are some earnings coming out, but we're mostly through the earnings season. Now, what we don't want is stacked green candles that break through this upper part of the channel. That would get us to a buying climax. So we know the buying climax happens in 2 ways. First, we get a very, very long green candle through a high plus trend line. It seems like the market's just going sky high, absolutely parabolic. Then the door will slam. We'll hit a huge, huge, huge bearish engulf or a bearish hammer. Lots of stack red candles intraday. That confirms resistance. Those moves can accelerate fast. I'm taking Pete's word for it. I don't know. I don't think I've seen a buying climax on a daily chart. I've seen it on an intraday chart. The same idea. These charts are fractal. Same idea applies, but I've not seen it on a daily chart. We have seen it on a bearish case right over here. This was a selling climax. We had a huge move down on October 13th from CPI, and we rallied the entire day to form a huge, long green candle. But we're not seeing it on the buying climax side. I think something like this would be the closest here. Market makes a new high, kind of treading water here. Massive candle up on the 27th. And then we sell off the whole day. Huge, long, bearish engulfing candle. Lots of selling pressure, lots of profit taking. Right? That's our first crack in the armor. Double top. and then we form a new low, that is the confirmation that we can go short. You can see how we had a buying climax here, a couple of days to hold the gains, right? Digest some of the move. We held this level, and then we were able to break the compression and take off. So that's what we're watching out for. That would be dangerous. We take profits on our swings, even put credit spreads, because that is a situation where the market can reverse and we can take some heat on our put credit spreads, which we do not want. We want to buy it when the market move accelerates very, very high for pennies. And then we can evaluate the dip from the sidelines and look to re-enter our put credit spreads. All right. So let's zoom in into the intraday action over here. So market gapped up yesterday, tested this level around 510. We're hitting some resistance at 510. We're struggling here for the first hour, and then we get a crack, a pause, another crack, and then we find some support around the yesterday's close, right around here, 507.53. So when I came to the market today, I saw this crack, I saw some support forming, and I'm like, okay, this is a bearish move, but it's mildly bearish because we didn't get the persistent selling pressure in the open. We had some profit taking, some buying in the open. We also had some pretty strong buying yesterday. So we want to see that most of the yesterday move is preserved, and we know that buyers are lurking here. Now, how do I know that it wouldn't be a bearish trend day? Well, I didn't exactly know, but let me give you an example here. We had some steady selling in the first hour. That's the difference, right? Sellers were active in the beginning part of the day. We got the bounce, and then we made the next leg lower. Now, here's a different example. Let's move back a little bit earlier. Oops. Okay, let's take a look at this day now. Small gap up, choppy move, sellers whack it down, we find support in the gap, and then we rally higher. This is a little bit more of a bullish case, but you can see how these long red candles didn't scare us as much because we knew that there were buyers at the beginning half of the day. They're going to show their hands again because they want to get a great price. So at the very least, we need to see how the bounce unfolds. If buyers can't get off the deck, then sellers will start to make their move higher. Same thing here, we rally up, smack it down, and then buyers come in. This was a different story, right? Big move down on CPI, and we see the continuation early in the day. Now, it did overreach. We tried to fill through the gap, and then we saw some steady selling. We broke through some of this area, and then the move accelerated. So the clue here revealed itself later in the day. The early morning pattern revealed itself later in the day. Early morning pattern, bullish day. Early morning pattern, bearish move later. Right, that's what we're watching out for. Strong move here, holds, start to climb up higher. Strong move here, gap down, start to climb up higher. Right now, could it still be selling? Sure, right? We could see some selling pressure here, but we know that there's not a lot of bearish momentum. There's not a lot of bearish momentum. All right, so what should swing traders do? What should day traders do? Now, if I was a swing trader, which I am, I'm doing both, I like this breakout here, and I would be long very, very relatively strong stocks. I'm personally taking deep in the money calls with at least a month out, so I don't have to worry about the time decay, and I can capture some of those moves. Weekly at the money CDSs work as well. Pete highlighted the weekly at the money call debit spreads. There's also weekly at the monies, which you buy a long put and you sell an at the money put on stocks who have had a bullish earnings catalyst and who have gone through some of their volatility. That's a great move to capture some of the upside and mitigate your risk on some of the downside. Now, I don't know how to do that strategy personally. I've never traded it before. I'm focusing on other things, so I will not be trading that. But for those who do, that is something that was thrown out there today. You can see how it works for you. So swing traders, I would be taking some longs here on relatively strong stocks and be ready to take a couple of days of pause and then a move up higher. I'm targeting at least a 1 ATR move. If the market resumes its steady price action higher, then I can ride those longs out for even more. Now, what should day traders do? Now, it really depends on the day, right? Today, day traders are not very active, and there's not a lot of great breakouts and great price action over here. Yesterday, we had opportunities to get long, and it turned into a nice bullish trend day. You could take some excellent longs on stocks here. Today, we're digesting some of the gains. I will walk through two stocks that I am in right now. The first one I took was Wolf at 12.25. So here's my thinking. I knew from the long red candles I was mildly bearish. Here's what would change my opinion. We start with the market first, as always. If the market rallies to VWAP, forms a higher low, and starts to move up higher, that would get me a little bit more bullish. I'd get in some starter longs. If the market holds the halfway point of this long red candle, can't advance above it, I would be a little bit more bearish, and I'd look to enter shorts. As you can see, the market erased most of those gains on pretty steady buying, and then we started to inch a little bit higher. So at this point, I was a little bit mildly bullish. However, I knew that if there was a move down, and it was a strong move down, then we could potentially retest this low from here. So when I took Wolf, here's the exact entry I took at 12.25. You can see how Wolf was extremely weak on the D1 chart, broke through some horizontal resistance and a low minus trend line. Very weak, did not bounce at all with the market, and then broke compression to the downside to make a new low of the day at 12.25. I really liked this move on Wolf. Now, here's what I didn't like in the market. This was a long red candle, and it was exactly what I wanted. The very end of the candle finished on a bullish hammer at 12.30. Now, Wolf did a pretty good job, but my market bias wasn't super bullish. I needed to see a strong move down that tested this low right here. We didn't get that. I took a small profits on Wolf. Entered at 24.15, got out at 24.11. That's it. I took the small win because the market didn't do what I wanted to do for one candle. I'm not willing to let that go against me. Now, Wolf made a little bit move lower here. What did the market do? Started to rally up, right? We got some tails under bodies. We started to make a move higher. Wolf bounced up as well. There's another entry point right here at 24.16, but I wasn't super bearish on the market, and now Wolf is showing some relative strength. I don't really want to beat anymore. This is not the super steady price action that I want to see. It was decent here, and now it's pitter-pattering. The other trade I took was Hood. Let's see how Hood is doing. So I took Hood on this high of the day breakout at 11.55. So I liked how the market was able to advance through VWAP, eat through some of this long red candle. I liked the move that Hood was making at around 12, I'd say. Let's look at the market at 12. Okay, so this was a starter position because the market sells a clear VWAP. I liked how I erased the gains here, and I knew we had a chance to make a higher low double bottom. Now Hood is compressing here. You can see it has to work off some of the supply from early in the day, and it has pretty choppy price action, right? It's compressing all the way over here. Once it works through some of that supply, it's holding up very well relative to the market. It's gaining relative strength, not moving down at all. That tells me that buyers are engaged. Once we get the next leg higher in the market, which we know because it's choppy price action today, we're going to get a move higher. I believe that Hood should soak up some of that supply and break through this compression at the high of the day. When we get that compression break, that's when I am going to take profits on Hood, ride that move up until I get some sort of bearish hammer or even an HA reversal candle. So I'm still in Hood, not worried about that, and I am just waiting for the right opportunity. It's a small starter position, so I'm not worried if it goes against me. You can see this is a very strong daily chart. Let's look at the pick from the last video, which was GE. GE is excellent today. Very, very nice pick. Made a move higher, held all its gains in the market, and then as soon as the market staged a rally, it also started to go higher. Now, market's moving down here below VWAP. GE is finding some support at VWAP, so I believe when the market finds some support, we should get a new high. My target on GE was around 154. Given the strength, I think I can push it a little bit, maybe to 155. Try to take 25-30% on that stock, but it's still looking excellent. Still looking very, very nice. Now, what I'm watching for GE is a bit of a pause here. After this pause up, we know that this is a good time to take gains when it's not able to make a new move higher. And then you could reload again on this next leg up. Depends on your trade. If I'm a shorter term swing trader, 2, 3, 4 days, that's when I'm looking to get out of the position. Current picks that we're in right now. First crowd continues to go higher. Really nice recovery today. Finding a little bit of resistance here at the 8 EMA. Excellent recovery though, right? Look at all the money we saved. We got here in at 334. If we do take the loss right now, it would be a $20 loss instead of a $40 loss, right? Huge, huge, huge savings. Earnings are coming up. The market is still bullish. Crowd is still a bullish chart, so I'm going to give it a little bit more time to test this high over here. It's holding up pretty decently well relative to the market. Had some nice strength today, so I'm willing to give it a little bit of time. If it starts to pause around this level, can't advance too hard, then I'm going to take profits. Or sorry, take the loss. Ally, our problem child. Still compressing. We're waiting for this leg up higher. It's not really rallying with the market, which I don't like. But still technically good. JPM posted some gains today. We're going to get to this in a second. I'm going to go for BSX and CFLT first. BSX had some nice move higher earlier today. If you had your target around this 67.50, like we're talking about 67.32, you could have taken some profits on this huge leg up on this bearish engulfing candle earlier in the day as it breaks to the top end of this range. So I would have taken profits on BSX at this point, and I would have called that a nice win. So I'm going to remove this symbol here. CFLT hitting a little bit of resistance at this level. You can see how it's not able to advance, but there is buying here. There is a compression at this range while the market's moving higher. I'm not crazy about it, but I am willing to give it a chance because we have a strong market. We have some market tailwind in our favor. So a market tailwind could have us force a break over here. If the market was stalling and CFLT was stalling, I would take the small loss in the position and look to fight in another day. Okay, let's talk about JPM here. What do I want from JPM? So first, we know that we are in a diagonal. We've sold the $85 call expiring this week, and we are long the 170 call in March 15th. Now, our call is doing really well. We're up about 30% on that. And our 155 short call is also not in the money, right? It's out of the money. Time decay is going to do its work. You can see here how it's been decayed so much today. And we want it to, depending on the price action, I'm either going to let it expire or take the small profits. It depends on my market outlook for the day. The ideal scenario for me is JPM rallies close to 185 but doesn't quite get there. Short call expires and I can ride out the long call. I like what JPM is doing over here on a longer term basis. It didn't drop with the market over here. I don't like how it's above VWAP, but it's still able to make new highs. I'm not a huge fan of this little bearish hammer here. It could go a little bit higher. I'd want to see a stronger move into the close here. Looks to be some profit taking at this 185 level. So I think my plan is going to be to close the short call today, look to take profits at this 185 level on this next leg higher, and then take a really nice win on JPM. So that's the plan for the diagonal. Ended up working out pretty well. Pretty well. Finally, I'm going to go over some of the positions that I am in. Most notably is the put credit spreads. My meta put credit spread is expiring today. Well out of the money. We're doing excellent on that. Our Netflix put credit spread still has a few weeks. We have until the 8th, so another 2 weeks on this, but it's also well out of the money, holding up the gains. Our GS put credit spread expires next week. You can see here is how it's trying to poke out of this range. We have a very strong high plus algo line coming into play over here. We need to break and hold above this high plus algo line. So I'm setting my alert. Do I have an alert on GS? Yeah, I've set an alert at the high of the day. It has to clear that and hold that on the next day. When we see that, then we can start to get long. These compression breaks are dangerous. GS has not been able to advance, but we are slowly grinding higher. So it tells us that there's a slight upward bias to this compression. And when we do get a break, we should have a really nice move higher. GS made a massive move in December, and it is just digesting all of those gains. Near this prior high. Looks like the all-time high for GS. Maybe we go to a monthly calendar. Could be a little easier to see because this is important to note. The all-time high on GS looks like 426.16. So we're going to set a horizontal level right there. And that would be the next really major level for us to watch out for. I think on this compression break, we could see a move higher. All right, so what would be my pick of the day? A couple of picks here, but one that I like a lot is Spotify. Spotify, first of all, post-earnings breakout, digested the gains, held the gap, inching higher, and this was the tell here. When the market dipped on the 16th, 21st, Spotify held its gains pretty well, inched up higher. Today it broke the compression to the upside. We've had a really, really nice move. Now, it's pulling back here a little bit, which is exactly what we want. I want to enter this stock on a pullback, and I want to see what the market's doing here. It looks like we're having a bit of a double top. We may test this low of the day. All right, that's great. I want Spotify to see some relative strength in Spotify. It could set up for a lotto. I don't know, actually, the liquidity of this stock. Let's check it very quickly. Not very liquid, so wouldn't set up for the best lotto. Might be some wide bid-ask spreads. You'd probably have to get it very close at the money. Yeah, not a lot of stuff here. You need to get some really nice, close, tight bid-ask spreads, which we're not really getting. So, maybe not for a lotto, but for as a swing, this is my pick of the day. I will try to capture a 1 ATR move on this. I think we have the market tailwind. We have the stock tailwind to push for these kind of moves. So somewhere around 260, 261 is probably where I'd set my target for Spotify. It's a bit of a choppy stock. It'll pause. It'll test the breakout. Be mentally prepared to take that position. So if I was trading it here, there's our pullback on spot. Right now it's the 23rd, so I'd look at maybe the March 22nd strikes, and we want to go pretty deep in the money. So Spotify right now is 253. Let's look at something that is 220 maybe. That's pretty high delta. Let's see if we can go cheaper. 240. 240 is a little bit low. It's fairly expensive, so I wouldn't want to go. Might be outside my price range personally. Yeah, you can see how the bid-ask spreads are a little bit wide. So probably the 235 call here. So you get that around, I don't know, $18. Could be a very nice move in spot. And you could probably sell a diagonal, to be quite honest on that. You could sell a diagonal at the 260. So let's look at that. Let's look at actually for next week. So I'll sell the 260 call here. And yeah, you can get a good dollar on that diagonal, or even the 260, 250. You can get a nice amount of credit on that diagonal. And then look, if spot hits it, you take the money. If it goes down a little bit, then you kind of offset some of the costs. You reduce the cost slightly on that. So that's probably what I'd do. I'd probably buy the March call, and I'd offset it by using a diagonal on the other call, given that the market might pause for the next couple of days, and I want that time decay to work in my favor. So that is our pick for today, Spotify long. I hope this video was very, very helpful, and watch out for the total month reviews for all our stocks for the end of February. We'll go over all those picks, and I will catch you guys all in the next video.